Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishi Sharma and with me is Vinny Motiwala. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we'll connect with our experts as well. And today onto the Buy Now, Sell Now lens, we're going to be focusing on the mega merger between IDFC Limited and IDFC First Bank and what's there for the retail shareholders. So we'll try and dig deep into that. But before that, let's have a look at what the markets are up to. Winnie, feels like a day of consolidation for the benchmark indices, but nevertheless, look at the move in Bajaj Twins.
Okay, Bajaj Twins. Consolidation, yes, slight bit of consolidation there, but let's not forget the Nifty did open up at the 19,400 level. So that was surely that new all-time high level that was there, 19,400. But after that, we've seen a correction coming in that. And like Shrishti was saying, a bit of a sharp correction that we saw in the Nifty. 19,334 is what currently the Nifty 50 is at. Sensex 2 is seeing mild gains today. Nothing exciting in terms of that. It's seeing gains of around 0.1% in trade as well. So keeping an eye out on that one as well. Broader markets too performing actually absolutely in tandem with the benchmark indices. The mid-cap space is similarly to what we were seeing for benchmark indices. Small-cap space, that's continuing to outperform. Yesterday also we've seen that the small-cap space was performing much better than the mid-cap space. So that is what has continued as well. And let's not forget and talk about Bajaj Finance. Among the top gainers, Bajaj Finance is up 7% after its Q1 update. Strong update coming in from there. With that, obviously, Bajaj Finserv has seen an up move as well. Hero Moto, obviously, on terms of the new launch that is coming in there. So that is the one that we're watching out for as well. 2% uptick there. Titan seeing gains of 1% as well. Other than that, in the terms of losers, we have Eicher Motors, which is down, obviously, given the competition that they will have from Hero. Bharti Airtel, Reliance, ONGC among the top losers today in the Nifty 50. But that's how the setup is looking like. But let's move on and talk about IDFC and IDFC Bank merger, right? That's an important one we're keeping an eye out on. IDFC First Bank is down 3%. IDFC is up almost 2.5% in trade. Now, this was an anticipated merger between IDFC Limited and IDFC Bank. The board has actually, the bank has said that the share exchange ratio for this amalgamation will be 155 shares of IDFC First Bank for every 100 shares that are held by IDFC. But for more details of how this merger is actually going to pan out, what does it mean for the shareholders, let's go across to my colleague Harsh, who's here to give us more details on that.
Well, yes, after that big HDFC merger, now we have IDFC Limited and IDFC First Bank merging. The exchange ratio is that if you own 100 shares of IDFC Limited, you get 155 shares of IDFC First Bank. That's a straight 15% upside to yesterday's closing price. So straight off the bat, a 15% upside offered to IDFC Limited shareholders for this merger. Of course, IDFC Limited shareholders have plenty of value unlocking which has happened over the last year or so. So we had IDFC Mutual Fund being sold to a consortium of led by Bandhan Financial Holdings for around 4,500 crore odd. We also had an infusion of 2,200 crore into IDFC First Bank. At the start of the year, we had a 1,750 crore dividend distribution which had happened again at the start of this year to shareholders of IDFC Limited. So plenty of value unlocking has already happened, and that path seems to continue for IDFC Limited shareholders. Where IDFC First Bank is concerned, the merger overhang goes away. That has been a large overhang because this merger has been in the works since quite some time. Also, the other piece is the book value of IDFC First Bank as a result of the merger goes up by around 5% or so. So therein also lies some amount of upside for shareholders of IDFC First Bank. But across the board, it looks like the merger will take some time to go through, of course, given RBI as well as NCLT approval. And we'll, of course, understand timelines better. But by the end of this financial year, it seems the merger will go through. Plenty of value unlocking as well as overhang, which is to go away.
Well, thank you so much, Harsh, for getting us all the details related to IDFC and IDFC First Bank merger. But this merger is a win-win situation for both the sides. And that's the word coming in from Nikunj Dalmia, Managing Editor, ET Now and ET Now Swadesh. Let's listen in to his take on this particular news flow.
See, I was looking at the swap ratio, the change which will happen, the book value, and probably the simplification process. I think it's a win-win for both. First, for IDFC Bank, the book value goes higher, which means you look at banks in terms of the book value. In this case, the book value goes higher. I've got a CLSA report in my hand, and the announced swap ratio implies a lower holdco discount of 6.3%, and we view the swap ratio relatively positive for IDFC Limited. So they're also getting something there. What this does is that this simplifies the entire process. This is not new. In December 2021, the market knew that the board had already announced that. But what this technically means that this technically will have an impact on flows, which is what we should look at, in the short term. The MSCI changes will automatically have an impact on IDFC First stock would move. So for IDFC First, the bank here, I think the book value increases and the potential flow also increases. That is the function you need to look at in the short term, and reduction in share count eventually is good. We must recognize, Avan, that IDFC Bank as a franchise, they've really made a comeback. The stock has seen a linear run up. A lot of confidence is coming back. So rather than just getting obsessed with this entire merger, what we must understand, what is the trajectory of the bank? Yeah. So what will happen to the merger in the short term and flows is technical function. But ultimately, the stock and the bank, I think, is on a different growth plateau. And they are in a differentiated growth plateau in last 2 or 3 quarters. The management has demonstrated that. For me, that is more important rather than looking at the merger ratio.
Because you have had close interactions, and that's
exactly. So they are firing full cylinders now, and FY24 will definitely be better. So that's point one, the medium-term picture. Short-term, the merger ratio, I don't think there is anything negative here. For IDFC Bank, the book value goes higher, and then the flows automatically will go up also.
Okay, that was Nikunj Dalmia, the managing editor of ET Now and ET Now Swadesh, his take on IDFC and IDFC First Bank's merger. But let's bring on board our guests and experts for today. We have Rajesh Agarwal joining in with us, as well as we have Kunal Bothra joining in with us this morning. Very good morning, gentlemen. And, Rajesh, I'm going to come to you and ask you, IDFC First Bank, when you look at it also just in terms of stock move, yes, it's seen a sharp run up. It has been one of the stocks that everyone has spoken about as in the past as well. Now with this merger coming in, what is your view on that? How are you seeing that change coming in fundamentally for IDFC First Bank now?
Morning, Srishti. Morning, Kunal. You said it right. This news was anticipated from a very long time, maybe 2.5 years or so. Every time some quarter numbers or something came, and everybody started talking that merger is going to happen, and ultimately it has happened. It was a long awaited merger, I would say. Yes, we all know that it's in favor of IDFC at this point of time, but looking at future prospects, I think there are several things which go in favor of IDFC First Bank. One, post-merger, the simplification of structure, the compliance will go down, and the best part is it becomes a probable candidate for inclusion in MSCI index, which I would like to repeat that it's a probable candidate. It's no guarantee as such as of now. The bank would not have any promoter holding. If you look at the fundamentals, it has been growing very well from the last 2-3 quarters, I would say. In the last 4 years, the deposit has grown by around 36% CAGR, and CASA has gone up to 49.77% on the last count, and that's a phenomenal jump from where it started. The book value would go to around 41 rupees post-merger, and if we give 2 times price to book value, the target price comes to around 80 to 83 rupees. And that's a good enough jump from the current market price, I would say, in the short term. Moreover, with the reduction of number of shares, I think that would be an added advantage, and that's going to do well. The management commentary in the last 2-3 quarters have been very encouraging. I would like to see how it performs in the next 2-3 quarters. And we have a buy call, but not at this point of time. Maybe a correction of 4-5 rupees, 75, 74 odd rupees would be a good level to enter. This merger would take around 12 to 18 months time, so one has enough time to accumulate this stock.
So IDFC First Bank is the preferred pick, but not at these levels. Maybe with some cool off in the share price even more, then you can look at adding this particular name. But Kunal, coming to you, we have discussed a lot many times about IDFC First Bank specifically, and the stock has shown a fantastic move in the recent past. So at this point in time today, as a trader and onto the technical charts, how do you see, because though the fundamental news is positive, the stock is under pressure. What should the investor already invested in IDFC First Bank should do at this point in time? And what's your take on IDFC Limited?
So, good morning. First of all, I think this is a technical adjustment to both the stocks IDFC as well as IDFC First Bank. Once that gets settled into, the stock would probably eventually go back to its initial path of an uptrend. I would still believe that IDFC First Bank at current levels, as well, if there is any kind of a dip, say closer to 75, 77 odd mark, should be taken as a good buying opportunity. The stock has shown very good recovery in the last 6 months or so. Even the last 2 years of charts, the stock has shown excellent recovery. So on the back of it, I would believe that the near-term as well as the longer-term trends have changed substantially positive for the stock price, and I would believe that post this mild technical adjustment, you would actually see these stocks gaining up significantly higher. So would be bullish on both of these names. IDFC First Bank at current levels as well as on dips closer to 75 could be a good buying opportunity.
Okay, surely keep an eye out on IDFC and IDFC First Bank. But on that note, viewers, we are going to slip into a very short break, but don't go anywhere. We'll be back and we will be taking all your stock-related queries after this break. So do start sending your queries on our WhatsApp number or even on any of our digital pages. Welcome back, and you're watching Buy Now Sell Now on ET Now. Let's get started with all your stock related queries, and viewers, you can send us your queries on the WhatsApp number that will be flashing on your screen or even on our Twitter page as well. So do start sending us all your stock related queries, and let's get started with the first query for today. And this one is coming in from K. Parthasarthi, who is a senior citizen from Chennai. They're holding BPCL, HPCL and IOC. Now in BPCL, they're making a 25% loss of 25% currently for BPCL. Should they hold the same or should they look to exit, Kunal? What's the view on this one now?
Well, I would recommend to hold on to the stocks as of now. The last 1 month we've seen very good recovery for these OMC names. Now the stocks are on the verge of a breakout individually. So BPCL, IOC as well as HPCL, they are on the verge of respective breakouts on the charts, and if this trend sustains for even the next 3 to 6 months, there could be at least another rally of 10 to 15% from current levels for these names. So purely based on the current setup, I would suggest to hold on these 3 stocks.
Okay, moving on to the next query, and this one is from SSV Chalam, and he wants to know. He has actually divided stocks that he is looking at into segments. Kunal, I'm taking it from you. He wants to know between TCS, Infosys and OFSS, which one he should bet on and enter at this point in time. And some of the other stocks that he is looking at in group 2 is BLS International as well as AB Soft. Any of the stock that you like between the two?
So, I don't track the tier 2 names which you mentioned, AB Soft, etc. But I think from the tier 1 names, TCS and Infosys at current levels could be attractive bet. But then you also have to remember that possibly when the quarterly result starts for these stocks, there could be some volatility or some correction which may come by. But I think buying on dips could be a good strategy for both of these names. I believe it could just be a matter of time that these large cap IT stocks would get back in line of the performance which you've seen for the mid cap IT space. So from the large cap IT names, TCS, Infosys, you can start buying, but then buy on stages on a staggered banner is a better approach.
Okay. Rajesh, the next query, and this is coming in from Vishal from Dubai. They want to know in terms of long-term basis, is it a good time to enter some Motherson now and also Reliance Industries at the current price? For the long term, would it be an attractive buy, both these stocks?
See, if you're talking of long term, by long term, I would be minimum 18 to 24 months. Yes, Reliance is a very good buy. Irrespective of the fact that it has run up quite a lot in the recent past, we are very bullish on that Geo platform and the retail venture where we have seen 800 stores being added every quarter, while other retail chains have 800 stores and all. Said the Geo financial merger would again be a very good leverage. That would give a leverage to the database which they have into Reliance Retail and Geo. And the OTC segment is also going to start performing because of Russian probe. I think all in all, everything goes in favor of Reliance. One can start accumulating. Some the Motherson Sumi is also very good, but buy on dip strategy should be taken because it has given quite some kind of return in the last few days. So maybe a 80 odd levels would be a better level to enter.
Okay, Rajesh, what's your take on NCC? Bharadwaj from Coimbatore wants to accumulate or rather enter this particular stock. So should he go and put his money maybe for the next 2 to 3 years?
Of course, because it's the infrastructure company is doing well, and with government focus on infrastructure and the election looming on our head in the next 6 months or 7. So I think the infrastructure allotment would be fastened, and this company is also going to benefit. A target of 135 could be taken for the next 6 to 9 months. For a longer term horizon, we will wait and see the performance.
Okay. Kunal, the next query is coming in from Carol. Carol, good morning to you as well. And she wants to know whether they can book now profits for Bank of Baroda. They're making 100% profit here. So should they book profits or maybe look for more of an upside there?
Look for more upside. I think the stock has just recently managed to break out of the 200 barrier. And I think most of the PSO banking stocks have been doing exceptionally well. Bank of Baroda being one of the formidable names and a better performer in terms of price. So I would suggest a hold on Bank of Baroda even from current levels.
Okay, moving on. And Kunal, what's your view on Page Industries? Ajay from Bangalore is holding 10 shares at a price of 37,000. What he's highlighting that the stock is continuously going down. So should he hold or sell considering 6 months horizon?
I think you should look to exit. The stock has been a big underperformer. It still continues to drag. There's a lot of supply or resistance which is coming across in the stock, and it tried to fill in the gap which was created for Page Industries 2 months back. But that complete fulfilling of the gap has not happened. Filling of the gap has not happened. And I think that's one of the major reasons why I would believe that the stock could be under pressure for at least another couple of months, if not more.
Okay, let's move on and talk about Bajaj Auto then. And Rajesh, this query is coming in from Dheeraj. One, they want to know in terms of Bajaj Auto, what is your view on the long term for this? What should we be expecting over there, as well as Eicher Motors as well?
Very bullish on Bajaj Auto as such, not only because the valuations look better in comparison to others, the performance has also been good, while other two-wheeler companies are not that giving out not that kind of numbers in monthly sales, but this company is doing well with the new tie-ups being made for higher range motorcycles. The export market is doing well. This company can give you 15 to 18% CAGR return in a long period of time. So it's a buy from our side. As far as the Eicher is concerned, yes, the RE thing is doing very well. I think that also has a good potential to go up. But I would say buy on dips maybe around 33, 30, 100 or 30 to 50 odd levels would be a better level to enter.
Moving on, and Rajesh, just wanted your take on EID Parry. Kurium from Cochin is a senior citizen and holding 100 shares of EID Parry at a price of 524 rupees. What to do in this particular counter, and what sort of a levels he should look at?
See, it's an ad from our side. The sugar division is doing well. They have holdings in Coromandel Fertilizer, which has a value of around 10,000 crores against a EID Parry market cap of 5,000-6,000 odd crores. So that way you are getting the company absolutely free. The management is very good. They have reduced debt considerably. And I think in a longer term horizon, this company can do very well. Maybe a 20%, 25% upside in the next 1 year or 18 months is quite possible.
Kunal, Devashish Nag from Bangkok firstly wants to really thank you for all the views, and he's been following you for a while, so he really wants to thank you for always helping him with your views. He has a query which is on Tata Motors and Tata Motors DVR. They have 900 shares of Tata Motors at 299 rupees and 900 shares of Tata Motors DVR at 221 rupees. Should one actually look to book profits here or continue to hold these two?
Thank you so much for that. I don't believe that you should be booking out profits if you're a long-term investor, and I can gauge that you've managed to hold on to both of these stocks for at least the last couple of years, if not more. Then I believe that these are better times for the auto pack as such. Four-wheeler stocks have done exceptionally well as compared to the two-wheeler stocks, and the auto index overall has been one of the best performing sector from the overall sector performance over the last 6 months as well as over the last 1 to 2 years. So I would believe Tata Motors stands out as a chart. Now the only question is that the stock would take some time to try and break past about the life highs of 610 plus mark. But I believe when you see such kind of strong chart patterns, very good recovery, a 10x return in the last 3 to 4 years for Tata Motors, certainly gives an indication that there could be more upside for the stock price. So if you're a long-term investor, I think you should continue to hold on.
Okay, moving on to the next one. And Kunal, the question is for you. This question is from Ghosh Dada. Actually, he wanted an advice back on Friday, and that was on Hero MotoCorp, where he booked some profit in this particular stock and wanted to enter again. So with the uptick after the Harley Davidson launch, the stock is showing good up move near to that 3,000 mark. So at this point in time, should he re-enter again or rather look to enter HDFC Bank?
So I would believe Hero MotoCorp could be a good bet. Now HDFC Bank, of course, at current levels could also be an attractive bet. But then specifically talking of Hero MotoCorp, I think at current levels of 29.50 odd on spot levels, the stock is confirming a breakout of a double bottom pattern on the weekly as well as on the monthly time frame. So the chart patterns look attractive. But I think the only question is that we've seen historically that after such kind of news flow and events surrounding a stock, for at least the next few days or at least a couple of weeks, the stock remains sideways. So you can start buying at current levels and maybe wait for say 50 point or dip for Hero MotoCorp for better opportunity where you can look to average.
Rajesh, the next query, and this one is coming in from Vincent, and this one is on ITC. ITC already seen that run up in the last 1 year as well, 52% uptick already. They want to know, as a long-term investor, would you still suggest them to buy ITC at the current price, or maybe one should hold on before they buy ITC now?
See, it's a buy from our side. I have been giving a buy calls in 150, 160 odd levels, and it's already almost 300% from that levels. But still, we believe that's highly underpriced, considering the fact that the valuations are good when you compare to other FMCG companies. The hotel division is doing very well. They give good dividends. It's a debt-free company with cash on books. I think everything is big in favor of ITC. One can go long, provided one has a longer-term horizon. With this kind of run-up, there might be some correction in between or a consolidation phase, but still it's undervalued. One can go long.
Okay, so that's the advice coming in on ITC. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back to take more of your stock-related queries. So stay tuned. Welcome back to Buy Now Sell Now, a show where we get you answers for all your stock-related queries. On to the expert side, we have Kunal Bothra as well as Rajesh Agrawal with us to guide you better. And moving on to the next query then, and Rajesh, taking it from you, the question is on Castrol India. It's from Kabir, and he wants to know the outlook on Castrol India. He has purchased 1,250 shares at a price of 113. So going ahead, what's your outlook on this one?
See, despite being very strong, having very strong fundamentals, giving good dividend, the stock has highly underperformed in the last so many quarters, I would say. Valuations are very good, gives good dividend. If somebody is happy holding for maybe next 2 years, I think 150 target can be easily achievable because crude prices are on a low. It has been trading in the range of 70 to 80 odd dollars in the last 1 quarter or so, and that's very favorable for companies like Castrol. We have a buy on this, but one should have a long-term price.
Okay, Kunal, the next query is on Cochin Shipyard. This one is from Akhil from Trivandrum. They want to know that Cochin Shipyard, if they're bought at 646 rupees, should they continue to hold or now maybe look to sell the stock?
I think it's a good time to book out profits from the stock. My sense is that these stocks would now get into a major consolidation, after a steep rally which these stocks have shown. So it's a good time to book out profits.
Kunal, they bought it at 646, so they're making a loss. So then, would that be something that they should average, or just get out of the stock right now?
Yeah, exit the stock is what I would recommend at current levels.
Okay.
Okay, moving on, and Rajesh, coming to you for this one. The question is from Debashish Das, and he has bought 500 shares of Piramal Pharma at a price of 92 rupees. What is the outlook on this particular counter, maybe for the next 1 year? It's almost near to its buy price, but do you believe that it could give him some handsome returns? And he also wants to know the outlook on Patel Engineering. The stock has shown a fantabulous move, so going ahead, at this point in time, should he enter in this particular name?
See, as far as Piramal Pharma is concerned, I think one should switch from this to maybe a better names like a Divi's Lab or a Cipla that would give better returns, I think, better than what Piramal Pharma can give. As far as Patel Engineering is concerned, the numbers have been good. It has been doing well in the recent past. Some marquee investors have invested in that. Maybe a 10 to 15% upside in the stock in the next 2 quarters is quite possible. A target of maybe 45, 48 odd.
Query is on BPCL Kunal, and this one is coming in from Raju. They have 350 shares of BPCL at 392 rupees. Should they hold or sell this one now?
I think we should hold on for at least another 3 to 6 months. My belief is that many of these OMC stocks have given very good breakout for themselves. So if this breakout sustains, say for another couple of months, you could start to see more upside into these names. And I think even if the stock crosses about the 385.90 mark, it could at least come back to a cost price. So you should give it possibly another couple of months at least.
Okay, Kunal, what's your take on BOB? Shyam Nayak has bought 450 shares at a price of 150 rupees. So what's your outlook on this one?
Would continue to advise to hold on to Bank of Baroda. My belief is that these PSU banking stocks are now getting into a very strong breakout mode, and they could be showing some excellent price performance over the next 1 to 3 months. So in that anticipation, I would suggest a hold.
Rajesh, the next query is coming in from Krish from Chennai, and they want to know on SRF as well as PI. What is your view on this one? Should they add SRF and PI as of now at the current levels?
PI would be a better bet at this point of time. Maybe upside of 10% is quite possible. As far as SRF is concerned, chemical division is doing well. I think a short correction of around 1%, a level of around 2000 would be a very good level to enter.
Okay, moving on to the next query then, and Rajesh, once again coming to you, the question is from Bhagwan from Mumbai, and he has bought 200 shares of Triveni Engineering at a price of 288 rupees. What to do in this particular name?
I think one should try to get out of this stock at this point of time. Valuation have become straight despite the fact that the company is doing well. But on valuation parameters, if we look, it's looking quite stressed. One should sell at this point of time. A new entry would be suggested only below 250 odd levels. At this point of time, it's a sell. Maybe one can switch to better sugar names. For example, as we discussed, the LD Perry or a Balkanpur Chini would be a better bet.
Suzlon Energy, do you have a view on this one? Anju from Dubai wants to know, is it a good time to enter Suzlon Energy for a time period of 6 months?
I would suggest no.
Okay, moving on to the next query then, and Kunal, Padma Sivarao from Bangalore is looking for a near-term target on Endurance. He has bought the shares at a price of 1600 rupees. So what's your outlook on this?
Well, Endurance has been one of the stocks which recently has managed to show signs of rally. The stock has come back into a 1-year high, 52-week high if I'm not wrong, trading now at 1600 plus mark. So looks attractive. Possibly the stock can come back towards 1800 mark after this breakout, say in the next 1 to 2 months. So you can continue to hold on.
Okay. Rajesh, this next query is from Vidya from Singapore, and this one is on Oro Pharma. They want to know, they have 130 shares at a price of 820 rupees. That was around 2 years ago, and they're still holding it for almost 2 years. Should they sell now and or look to average it and minimize their loss? And what is the view on this, or continue to just hold it, or what are they holding at the current levels?
See, it's an ad at this point of time. Valuations are good. It has not performed from a very long time. And just a matter of time when it starts performing, the numbers are improving. I think one can go long on this stock. If the funds allow, one can even add.
Okay, Rajesh, what's your view on two names, two from the large cap space? One is Trent and the other one is M&M. The question is from V. Mathur from New Delhi. And he's holding 70 shares of Trent at a price of 1354 rupees. And M&M he has bought from levels of 755. So what's your outlook in both of these counters, maybe for the next 2 years, and also at this point in time, can he add more?
So first of all, congratulations for buying at such low price and setting on with a long-term view. You've done a fabulous job. Yes, one can add M&M at this point of time. The numbers have been good. Tractor sales are growing and likely to do well, considering the fact that elections are in the near. So rural economy would be in focus. M&M is going to benefit not only because of that, but because of passenger vehicles also doing well. Secondly, which of the stock Trend you said, right? Trend is also doing well. The numbers have been good. Retail chains are doing well. I think that a target of 1900 should be kept on Trend, and one should carry on.
Kunal, this query is coming in from a student from Hyderabad. The name is Vidushi. They are holding 100 shares of Igarashi Motors at a price of 322. They want your advice that, should they continue to hold this for the next 9 to 12 months, or maybe it should be a longer period? Could you advise them on this?
Well, yeah, I think 9 to 12 months would be a good period to hold on to the stock. But my only concern is that the short-term charts are actually looking a bit more toppish for this name. So there could be a possibility that the stock may drift lower. It's broken a major support. I think 480.85 was a major support for Igarashi, and the stock has broken below those levels. My sense is that maybe the stock can correct towards at least 440, 450 mark, if not more. So maybe you can probably tweak it a bit. You can sell or exit at current levels, book profits at current levels, and then look to buy back if the stock comes closer to 450 odd mark.
Okay, moving on to the next query then, and the question is on Godfrey Phillips. Let me take it from you, Kunal, because he's a short-term investor and he has invested 100 shares of Godfrey Phillips at a price of 1750 rupees. So what's your outlook on this? The question is from Gopal Rao from Nagpur.
The stock is now trading at slightly lower level, 17, 15, 16 mark, but nothing attractive as a chart. The stock has this odd tendency of going sideways for years, and the rally which starts off, all of a sudden, and the stock moves into rallies for a few months. So it's a very odd kind of a stock. The risk reward, of course, at current levels is attractive, but the chart patterns and the way the stock generally tends to move is not a typical stock which you would want to hold on to. A better bet from current levels would be ITC. So if you're a long-term investor, makes sense to switch from Godfrey to ITC.
Kunal, some compliments coming your way for your new haircut. Satya is like, your haircut is looking really lovely. And the query is also for you from Satya, and this one is for, BSC, SJS, as well as Cipla. They're making a profit of 20% and more in these stocks. Would they still hold this? Should they hold this stock, or maybe book out of profits and shift to something else now?
Thank you so much for that. And coming to the queries, I think you should hold on to all three of the names. Now, specifically, I think these stocks have started to show signs. So, for example, Cipla has started to show signs of a very good recovery in the last 1 or 2 months. And look at the battering the stock had gotten in the second half of 2022 from 1200, 1150, 1200 mark. Stock at one point had fallen to almost sub 900 levels. It's trying to recuperate, come back towards 1000 plus mark. So which means that the recovery is in line for these names. I think you should continue to hold on to these stocks even if you're sitting at a decent gain of 20% plus.
Okay, Kunal, we did take your view on some of the auto names. The next question is actually on Eicher Motors, because Hero MotoCorp is definitely buzzing on the back of Harley Davidson launch, but that's a negative news flow for Eicher Motors, and the stock is now down over 5%. Imtiaz from Kolkata has bought 50 shares at a price of 3,680 rupees, now at a loss. So at this point in time, what should he do?
Well, I think you should exit the stock even at current levels. Now, a stock which generally gets impacted with such kind of news flow generally takes a lot of time to get into recovery, as well as in the process of the stock recovering. You tend to see the stock going into more phases of correction, because there would be definite amount of churn which could happen into the sector. So I think it makes sense to exit the stock even at current levels.
Rajesh, we have a query coming in from Sushil Kumar, and this one is actually on that recent IPO, IQ Lighting. Now, they want to know that if they've received this, that should they continue to hold this, or maybe exit and book out?
One should book out of this stock because valuation parameter, it looks priced after the kind of run-up it have given post-listing, it's better to book out and look for some other stocks.
Okay, Rajesh, but any alternative that you wish to suggest?
See, for the short term, we can suggest Birla Park. That can be a good buy. The company has done a good expansion in Maharashtra. They are looking to expand in Gujarat and Rajasthan also. The debt has been reduced. The numbers have started moving up. Infrastructure focus of the government. Everything goes in favor of this. One can accumulate Birla Park.
Rajesh, the next question is from Bala from Chennai, and he wants a fundamental take on Glenmark Life Sciences as well as Jubilant Ingrevia. What he's highlighting is that he has already had some shares, but he didn't share his buy price and just wants to know the outlook on the same, and also can he buy more at this point in time?
See, unless some news flow comes in about results or anything else, I don't find any reason to add on to both of these stocks. They have hugely underperformed the market and the sector as such. No positive signs as of now. So it would be better to switch to better names as discussed in the show. Sepla and Davies would be a better bet to put new money.
Okay, on that note, viewers, we're going to slip into a very short break. Don't go anywhere. We'll be back soon and we'll be taking more of your stock-related queries. Welcome back, and you're watching Buy Now Sell Now on ET. Now let's move on and take the next query, and this one is on Endurance Tech. Kunal, for the near term, how is this one looking? This query is from Padma Sivarao.
So I would suggest to hold on to the stock as of now, and possibly in the next 2 to 3 weeks or so. Because of today's recovery, the volume and the price action, I would expect the stock to come back towards 1800 plus at least.
Okay. Let's move on and talk about the next one, and this one is for City Union Bank, Rajesh. We have Raghu from Bangalore who's holding City Union Bank 1,000 shares at around 179 rupees. What should they be doing now?
See, for short term, the target is 140 odd rupees. The numbers have been pretty bad in the last 2-3 quarters. Asset quality has not improved that much, but the management has given in their management commentary that they are going to put focus on recoveries. If that happens, a higher target would be quite possible. But considering the kind of beating this stock has taken in the last 2 quarters or so, the valuations are okay. One can buy with a target of 140, 150 odd levels in the very short term.
Kunal, this next one is from Sailesh from Bangalore. They want to know if they can take fresh positions in Titagar and Gokuldas shares at the current market price.
Titagar, I think it's a bit tricky because the stock has just gone into an exponential uptrend in the last 1 year or so. I remember, I think closer to 100, 150 odd levels is where we recommended a buy on Titagar. But now I think at 516 odd mark, the entry price could be a lot more steep. So I would suggest to wait for a significant correction to buy or to enter into the stock. Gokuldas export, on the other hand, I think maybe closer to 450, 440 levels could actually be a good buy. It's retraced mildly from the previous highs, but then the retracement has not been complete for the stock price. I would believe that there could be another leg of correction and the stock may come back towards 450 or mark or slightly below. That could be a better level to enter.
Okay, Rajesh, Anant Nayak, who is a long-term investor from Bangalore, they have 10 shares of Raymond at 1,356 rupees. Should they add more at the current price, or what is the view on Raymond now for the long term?
It's very good. The brands are doing well. Real estate, they have started developing, and that would add to the numbers. But adding at this point of time would be a little risky. Maybe 1500 odd levels, if by chance it comes, then it would be a comfortable position to add. But whatever you are holding on, continue.
Kunal, this next query is from a short-term trader, Vidya, and this is on Bajaj Finance. They have Bajaj Finance at an average price of 7,000. They've been holding it for a long time, but now they're making good profits. So should they actually look to move out of the stock and buy something else, or continue to hold this?
Continue to hold on. I think in this leg of uptrend, the stock could surpass the 8,000, 8,200 levels as well. That could be a better time to book out profits even if you're a short-term trader.
Rajesh, the next query is from Vijay, and this one is on REC. Is it a good time to enter REC for a time period, holding period is 1 to 2 years? Would you suggest that they should buy REC?
See, both these stock, REC and PFC, but they move in a similar fashion. Trading at a PE of 2-3, price to book less than 1, giving good dividend yield of 7%, 8%. I think somebody looking for a steady income of dividend and a capital appreciation of 10-15% in a year would definitely hold on to the stock, even buy REC or PFC for a target of maybe 20% upside from the next 12 to 18 months.
Query is coming from Ramamurthy from Bahrain, and they want to know that should they exit Vodafone Idea and buy RIL? I don't know how many shares they're holding, but that's the question that is coming in from there.
Yeah, I think that could be a good proposition. So, we've always recommended that stick to large cap names. They are the ones which can do exceptionally strong in terms of the market mood in various phases of the market. I will stick with that. That I think it makes sense to switch from Vodafone Idea towards Reliance Industries.
Rajesh, Deep wants to know on Jubilant FoodWorks. They're holding 500 shares at 611 rupees. What's your view on Jubilant FoodWorks now? Is it still attractive to continue holding even though they're making a loss currently?
See, they are making a loss because of huge raw material prices, but since the inflation is going down, I think this quarter numbers should give some solace. The same store sales has gone up. I think one can continue to hold for a target of 560, 570 odd levels in the next 1 quarter.
Okay, but with this, viewers, it's time to wrap this edition of Buy Now, Sell Now. But before we go, thank you so much, Kunal and Rajesh, for joining us today onto the show and helping all our viewers with their stock-related queries. But before you go, viewers, in an exclusive conversation, Tamil Nadu's industry minister TRB Raja gave an insight into the state's policies towards auto manufacturing, especially the EV sector. Here's an excerpt from the exclusive conversation.
Tamil Nadu, strong manufacturing base. What makes it so special?
Well, it's the culture, it's the atmosphere, it's the stability, it's the policy continuity. That's the most important part. And I think Tamil Nadu has always been a manufacturing hub. Started with a cluster in Coimbatore, and slowly as we built up, and especially in the auto industry, we've always been a leader, and we've probably hit the peak when it really mattered. So we got there when the world really needed it, and we've sustained that leader from there.
Right, and you're looking at getting into the EV space.
Yes, we are already into
Yes,
EV.
I mean, sorry, we're looking at, you are the largest, I think, producer of EVs when it comes to numbers.
Yes, we are.
And I think, you've got Ola in here, which is really mega in terms of two-wheelers. But, increasing your footprint, you have, let's say, you've announced an ambition to attract about 6 billion or 50,000 crores of investment, especially on EVs over here. That's quite a big number. How do you propose to achieve that, and really what's being done?
As you said, this is the automobile capital of India, and we are already the EV capital of India too. Our Chief Minister has a very clear-cut mandate. He's given me a very clear-cut mandate to make this the EV capital of India. We already have 46% of all the two-wheelers that roll out of India, comes out of Tamil Nadu.
So can you just elaborate a bit more on charging infrastructure, because what's being done, from what we understand, that is one of the main kind of deterrents now for EV purchase. Price is there, yes, we know, range is also there, but range in a way is linked to charging infrastructure. The better the charging infrastructure, the range issue is there. So what is specifically being done, and
See, for charging infrastructure, you need good inputs, the high power inputs, right? So, to get the transformers in place, and wherever you want your charging infrastructure, if you want to put up a transformer there, it becomes an issue. Kerala has done a good job with this. They've opened up their substations, right? So when you have your charging infra closer to the SS, then you get it, that part of the problem is solved. It's not going to solve all our problems, but that's a good place to start. So we do learn from states that perform well also. So we've learned from them, and that is probably where we'll start. That's going to give a quick boost to the infrastructure along the highways.
Right.
So wherever there are substations, we're trying to bring in plug-in stations there. So that will solve the mental block of all those who want to purchase EV vehicles.
Right.